Candice Burke. I'm one of the hosts on Talk Money to Me, which is an Equity Mates podcast. Super stoked to be here, and I'm going to be your MC. So I got a little bit of an intro here that I will be bringing us in. But just before we do so, super pumped to hear Marcus and Owen's stock idea because that's my day job. So I love listening to other people's investable ideas in the market. So welcome everyone to the Equity Mates studio. This session is all about our favourite topic, investable ideas. We're going to give our experts in the room here 15 minutes each to pitch us their highest conviction stock idea. First up, we have Marcus Padley, founder of Marcus Today. Thanks for joining us.
Thank you.
And just before we let Marcus do his thing, please remember, guys, this is the disclaimer part. You know, all the information we're talking about today is for education and entertainment purposes only. You guys know the drill, general advice only. Speak to your professional advisor before you make your decisions. Before acting on this general advice, you should consider if it's relevant to your needs and objectives, and also read, if applicable, the product disclosure statements. And if you're unsure, please speak to a professional financial advisor like myself. Equity Mates operates under the Australian Financial Services Licence 540697. Okay, that's all done. All right, over to Marcus.
Thanks, Candice. Hello, everybody. It's quite intimate, this, isn't it? Talking to myself here. It's quite sexy. Right, I don't know whether anyone knows who I am. I have to say 70% of my Marcus Today's demographics over 60, so I can see we've definitely upped the average age in this room. Well done, everybody from Marcus Today. I've got some little presents here. If you want to pass those along, put your hand in. Watch out, there are some badges. Anyone who's a Marcus Today member can steal a badge. Otherwise, you've got some pens. I went to Port Phillip Publishing. I'm just going to ramble, right? I know you want a conviction idea, you're impatient for something, but quite honestly, when you hear it, you'll realize it is not that sexy, but it's a really good recommendation. Let me tell you about broking and how it works, and let me tell you about the stock market and how it works, okay? I went into broking in 1982, and on the first day got taken aside by the established English stockbroker that I sat next to, and he said, Marcus, come with me, I'm going to tell you how stockbroking works. And at 10 o'clock we went downstairs to the Jonathan's bar in the stock exchange in London and had a pint of beer, as you do in stockbroking in those days. And he said, Marcus, this is the way stockbroking works. You find a stock that is less than a penny, buy millions of it, and spend the rest of your career marketing it. Okay? Now this, you may not know, is how the stock market works. Everybody is selling a stock. So everyone you see on this stage with their conviction stock, unless they're a complete idiot, hold it. Every fund manager you see presenting to you is pumping his own stocks. All right? This is how the stock market works. Every article you read on those websites, I won't name them, because there's nothing wrong with them, but I won't name them. Every article you read which is talking about a particular stock and how fabulous it is because that person holds it. So the whole game is about talking up your own stocks. All right? That's how this industry works. Now, what's a conviction stock? I'll tell you what a conviction stock. I think it was invented by, was it Charlie Aitken? We're in a private little world here. Conviction, the word conviction buy, I think was invented by Charlie Aitken when he was writing, and he's a fabulous writer. He was writing newsletters, and he wanted people to take notice, because when he said buy, nobody took any notice. So he started using the word conviction, and it caught on in the industry. So conviction really means an idea that nobody's taking any notice of my other ideas, so I'll call it a conviction idea. So that's why we're talking conviction stocks. Right. Now, I know a lot of this younger demographic, not my demographic, the younger demographic has been sucked into the market in the last couple of years by COVID, and all you have to do to see the activity in the stock market is have a look at the Self-Wealth share price. Okay, this is a trading platform that was doing nothing for ages and absolutely boomed when COVID came along. Everyone started trading. It went up to 80 cents. It's back down to 20 cents now. And what's happened is you guys, or not all of you, because some of you have been investing for ages, But a lot of people got sucked into the market in the last couple of years and are now left wondering, how is this game done? Well, let me tell you, if I had X, all right, X is the amount of money I would need to get off this stage, not bother with anybody else, and retire. If I had X, what would I do? And astonishingly, over the last few years, I have bought into the idea of ETFs. And the reason ETFs are so fabulous is because they're low volatility. And let me just tell you that as a stockbroker for 40 years, the game of dealing in individual stocks is a mug's game, all right? It is not something you do lightly. It's something my demographic do because they are spending all day doing it at home. They love doing it. They've got experience. They've got skill. They have the money to invest. They're fully engaged. But for people who have been pulled into the market in the last couple of years, be careful with this stock picking stuff because it's volatile. So I think if I did have X, I would probably buy an ASX 300 accumulation compounding ETF, and with my skills, I would simply time the market. That's what I'd be doing. So that is a really good solution for you guys out there, because if you go stock picking smaller stocks, you're gonna walk away from the stock market in a couple of years going, that's crap, and you'll never invest again because you're bound to take a lot of hits in volatile share prices. There's no genius waiting out there for you to tell you that this is the stock to buy for the long term forever. It's all about timing stocks, all right? So I'm going to give you a stock that you can time and is better than the ASX 300 accumulation ETF. And that is, boringly, but very cleverly, Macquarie. It is the core stock that you would hold in any portfolio after all the stocks that everybody holds because they can spell them. Telstra, CBA, Westpac, the four banks, BHP, Rio, Wesfarmers, Woolworths, everybody's holding them. Why? I don't know why you're bothering. Macquarie has, do you know how many employees Macquarie has? 18,133. Who are those people? Those people are the people who rejected Marcus Padley. And it's the Marcus Padleys that they reject that make Macquarie the best. I did not get through their personality program test, and the reason why was because I was not a team player. Can you believe that? I have to agree. But Macquarie has 18,133 of people who have passed the personality test, who are some of the smartest brains in Australia. And you know what their one job is? What's Macquarie's one job? Make money. All right? So you've got 18,133 of the best brains in Australia with one purpose in mind: make money. Now, I reckon that's a pretty bloody good investment. One caveat: Macquarie's a bull market stock. In the pandemic, when the market dropped 35% in 35 days, Macquarie underperformed badly. And in the recovery, Macquarie has outperformed fabulously. Now, since Macquarie listed, it has outperformed the ASX 300 accumulation index by hundreds of percent. It is a far better investment than the market as a whole, which involves all the crap stocks. So rather than invest in an ASX 300 ETF, I'd invest in Macquarie, and I would spend my whole time trying to time Macquarie rather than bothering to time the market. But it's a stock, and take note, you only hold in a bull market, so you do have to time it.
Marcus, can I interrupt there? Because I just want to ask you this question.
Oh, I've gone over, have I?
No, not at all. You're still good, man. Don't worry. Timing the stock, right? So I just looked on the Bloomberg app. It's about $160 a share. It's about 12 times PE, and it has an EPS growth of 12 times. So my question to you is, are you buying now? Would you be buying now?
No. And what I do is, as all members know, I don't predict anything. At the moment, we're in a down market. It's gone on rather a long time, I've got to say. There are some really simple drivers that will turn this market around. So I wouldn't bother trying to analyze Macquarie. Conceptually, it's a stock that's a high beta stock will outperform when the market turns. So the moment the market turns, you'll find every Marcus Today member will pile into Macquarie. And there's no need for me to time Macquarie's fortunes to look at what Macquarie's profits are doing, because it will turn with the market. How do you time the market turning? It depends on what drivers are driving the market down. At the moment, obvious ones: inflation, bond yields rising, because inflation's rising. You don't really trade on inflation because it's always a historic number. But bond market is far smarter than the equity market, and bond yields will peak at some point. They need to peak materially because we got sucked in when they just dipped quietly for a couple of days. But bond yields will peak. Particularly, you'll see the US dollar will peak as well. At the same time, the Aussie dollar will start going up. You'll see it on every market chart will start to turn. And that'll be the moment to buy Macquarie, when the market is turning. As I say, we got sucked into being a little bit short-term in the last couple of weeks, and got involved in the market again. That's now looking a bit silly. But that's the game. You can't make money without taking risks. We took a risk, hasn't come off yet. We'll just quietly exit as painlessly as possible and wait for the bigger turn. What we've learned in the last couple of weeks is when the market's in a significant long-term established downtrend, it turns like an oil tanker. It doesn't turn like a speedboat, and we rather reacted to a speedboat in the last couple of weeks. So we will quietly probably exit in the next couple of weeks, and we wouldn't be buying Macquarie till we saw a significant market bottom.
Definitely agree with you there, but I'm going to challenge you a little bit. I like the quote, it's not timing the market, it's time in the market, which I think you would agree, right? So,
no.
Time in the market.
No, that's absolute crap. No, I'll tell you why it's absolute crap, okay? There was an academic study done in, sorry, Candice. One of the worst things about the stock market is the casual quotation of bullshit lines which are put out by the industry to serve their purpose. The one thing this industry wants you to do is to buy and never get out, okay? You walk onto the car yard, you'll be sold something. It's quite an effort to get you to buy something. A financial planner to get you to buy 5 managed funds is hard work. When you ring up when the market's down 20% in March 2008 and say, look, I'm losing too much money, I don't like this, what should I do? What's he going to say? He's not going to say, yeah, let's sell. It's a nightmare for every financial advice giver to have someone engaged with the market who wants to buy and sell. They will just tell you it's time in the market, not timing the market. It's just crap. There was an academic study done in the 80s which said you can't time the market. That was the conclusion. I read the whole bloody thing, and it's a wodge of paper you can do this with, and it was in the 80s, for Christ's sake. And let me tell you, it's all statistics. And one of the worst things about the stock market is people giving you past statistics as a forecast for the future. That's bollocks as well. So this piece of paper says you can't time the market. That's what every financial advisor loves, the idea, and constantly promotes to you that you can't time the market, because it means they don't have to take your phone call every time the market goes down. They just want you in, stay in, keep paying your fees, don't disturb me. Can't time the market, so I shouldn't bother. Well, a lot of you sitting at home who've got SMSFs and you've got a finite lifespan, maybe you haven't got the time that Warren Buffett suggests you have to see it through to the end. Maybe you need to time the market. Sorry, Candice. Got on a rampage there.
All right, so let's get you off that soapbox just a little bit. So let's go back to Macquarie then. You know, talk more about the business and why that's your high conviction stock for today. And then we've just got about a couple of minutes, and then we'll hear from Owen.
Look, most of their businesses earn a percentage. Okay, so if I give you their businesses: asset management, retail banking, business banking, wealth management, asset financing. All of these are paid a percentage on the size of the assets. So when the asset value goes up, they get paid more. They are, because of that, a bull market stock. They need prices up, asset prices up, and they earn more money. It's as simple as that.
Equity line.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.